right, we are live. Welcome everybody to the morning show. This is Stock Market TV. Spencer, Steve, JC, Alfonso. Hope you all enjoyed the long weekend. Had a great Good Friday. Had a happy Easter. Did all that good stuff. We are back in the saddle. It's Q2. Can you believe it? Second quarter of the year. We're here. We made it. And wasn't it a good quarter? It was a good. We'll talk about that. We'll talk about how good a quarter it was across the board here. New guest on the show today. Very exciting, Mr. Kenny Polcari. He is a chief market strategist at Slatestone Wealth. He also has a nice Substack. He'll be on the show in a half hour. Very excited for that. We'll have Mr. Ian Cully on talk FIC at around 9:30, 9:40, and that's the rundown. Good morning, chat. Dawson, Project Denable. Phil, Acquisitions Marketing, Mary, what's up, Mary? Frey, Curtis, hope you all had a great weekend. I got Steve here, I got JC here, so let's roll.
All right, I got a confession to make right off the bat. You ready? You ready for this?
Give it to me.
I never thought I'd be saying this. I lived in California for 5 years.
That was a drum roll. Sorry, it was a bad sound effect.
Wow, that was terrible.
It's not good, though.
All right, I need a new one. I'll get a new drum roll. Sorry.
Oh, that's terrible. All right, you ready for my confession?
Yeah.
So I got wind of this thing this weekend called a Cali-style cheesesteak. Right, so it's a Philly cheesesteak Cali style.
Let me guess. There's avocados on it.
Nope. Although that's a pretty good idea. But then no, there's no avocados. I almost threw up in my mouth. I was so disgusted by the whole thought of a California style cheesecake. I'm thinking like vegetables and all this crap in there. You know how these California people are. I lived in California for 5 years. No one out there knows what a pizza is or a cheesesteak. But they do other things really well. Tacos and other things. Great, right?
What's on the cheesesteak?
So ready? Dig this. So I'm like, you know what? I was ordering for the family. I was ordering for the kids. I was like, why don't I get a regular cheesesteak and I'll have a Cali-style cheesesteak? So as it turns out, this is like a Penn State thing, I guess, or they do it a lot over there. So it's the regular cheesesteak, right? Delicious, but with lettuce, tomato, and mayo. I gotta tell you, it's pretty fantastic. I never thought I'd say this, and it's almost like sacrilegious. But I give credit where credit is due. This is a new phenomenon. I started asking around. I was like, you guys heard about this? And they're like, oh, yeah. So my buddy is so hardcore Philly, like so hardcore that he refuses. He likes the Cali style, but he refuses to order beef with his Cali style. He gets chicken out of respect for the OG. I was like, okay.
I mean, they're not really reinventing the wheel here by putting lettuce, tomato, and mayo on a sandwich, are they?
I never heard of it. And I'm not like sheltered. Like I get around.
You wouldn't think that you would want that on a steak sandwich, though.
You know, the one on the northeast corner on 46 and Park in the city does something similar. And I kind of like, you know, just throwing it out there. Cali style cheesesteak.
What were you doing in the city?
Oh, no, I wasn't in the city. But I lived there for a long time and I used to work in the Helmsley building. So I would get the cheesesteak at the guy's house.
Oh, I thought you were in Philadelphia.
I was not. I was at the local social club here. Good Eats.
Oh, the social club.
Oh, yeah.
So was your weekend full of monthly and quarterly charting?
Can we? Shall we?
Ooh. Call it a segue. Ortiz.
All right. We got the Dow futures. They were up all night last night. I saw a lot of very excited tweets last night with Dow futures, with futures up across the board. Dow futures are actually down 30 points this morning. S&P futures are flat, hanging around there 5,300. Dow futures hanging around 40,150. How about that 40 handle on the Dow? NASDAQ futures up a little bit, about close to 30 points, about 15 basis points. Bond futures getting the crap kicked out of them. Down almost 1% today on the 30-year bond, down to 119 and change. Then you've got gold up again, 2270, all-time highs, up 1.4% on the day. Silver also up almost a full percent, above $25 this morning. Copper, Strazza, back above 4, hanging in there tough. Crude oil down 40 basis points, pretty much flat this morning. Dollar mixed with the euro and the yen flat. Volatility index up a little bit, just under 14, 13.75. U.S. 10-year yield, Strazza 4. Did we lose me? Are we back? Are we back? Got quite the storm here, Strazza.
We're on 10-year yield.
We're on 10-year yield, hanging around near 4.24%. Let's go over to the old funny money. Lot going on in cryptocurrencies with Solana hanging out above 200.
Yeah.
All right, let's do a quick little rundown and then we'll get into some stocks. So we've got the old BTC back under 70,000, 69,700. I mean, this, when you talk about demand absorbing supply and what that looks like, this is that, guys. Ethereum down 2.6%, 35.50 in the morning trading. And Solana just back under 2%, under 200, down 3% on the day, 196. Total crypto market cap, 2.55 trillion. Spencer Israel, what are we thinking? Any observations over the weekend? I don't do a lot of quarterly charting. I might do a little today just for fun. Monthly candles are enough for me. But what stood out in your sessions this weekend?
You're talking about Bitcoin absorbing the overhead supply up here.
Yeah.
I think it's just important to point out that this is very constructive, right? We're correcting and digesting gains more or less through time in the Bitcoin chart, not through price. I understand you had like that one big down day. You had 3 red candles and that one big down day into March 19th. But other than that, like we're tight right here at these prior all-time highs. So I think that's good. Overnight, some strange volatility from like midnight to 2 a.m. A strange sell-off. And now you're telling me futures big reversal too?
Yeah, Dow futures were up like almost 200. Russell 2000 futures were up a whole bunch last night. And they gave them all back.
Is there like any silly reason for this?
I think aren't there still some market closures today? Easter Monday. That's definitely a thing.
Spencer's our chief silly reason officer. Any silly reasons for this sort of behavior?
No, I'm saying aren't there some markets closed? So there's like less liquidity today. I thought.
No.
You know, when there's no reason,
it's closed. There's nothing closed.
I don't know. I thought something was closed. Maybe
nothing closed. Everything's open.
Okay.
When the journalists,
by the way, even when they're closed, they're still kind of open. You know how, you know.
Hey, Caesar. Thank you, Caesar. Europe was closed today.
Oh, European markets are closed today.
Thank you, Caesar. I knew I didn't make that up.
Are European futures markets open? My suspicion is the answer is yes.
So you know what they call it, the journalists, when they have no reason for the sell-off?
There's a few go-tos. What are you thinking?
They call it a technical correction.
Technical correction.
It's technical correction.
Dumbest shit I've ever heard.
When there's no good reason, it must be the technicals.
It must be the technicals. What do you say we get into a couple of charts that I think are worth noting here?
You got some monthlies?
Do I have some monthlies?
You want to do some monthlies?
Dude, you're looking at a guy who eats Cali style cheesesteaks. do we have monthlies? Yeah. I never thought I'd say that. I feel a little bit guilty. I like how my boy, as like an homage to the OG, just refuses to get beef and he gets chicken with that. I thought that was kind of funny, right? I like his style. Yeah, he's a good egg. Shout out, John. All right, so let's go over a couple of. Let's go over. What do you say we go over the Fab Five? Is this a good place to start, Strazza?
Yeah, all right. I feel
like we always start out the monthly sessions with this five. What do we call it? The 5 before the nosedive. You can't have a nosedive without these things breaking.
Why are we talking about nosedives? Look at how beautiful this chart is. I mean, absolutely killer. 5 straight months now.
First of all 5 of these are nice charts, but let's go over them and then we'll discuss. Let's go over one by one. Ready? Industrials. This is arguably the most important sector in the United States. It's the one that's most highly correlated with the S&P 500. New all-time highs. Next, semiconductors. The new transportation index, some might argue. You can't have any technology without semiconductors. Strazza always likes to argue that these are much more cyclical in nature than a lot of other growth stocks. New all-time highs. Next. Home builders, one of the largest and most important components of the consumer discretionary space. New all-time highs. Next. Technology represents 30% of the S&P 500, largest component in the United States. You've got 50% of the NASDAQ is technology, barely squeaking out all-time highs, but nevertheless, new all-time highs. Next, last one. And here is your New York Stock Exchange Broker-Dealers Index, also going out at new all-time highs. So these are the Fab Five. You know, the argument has been if they're above their prior cycles highs, which are late 21, early 22, then you know, hard to be bearish on this market. Hard to think that any correction is anything more than just that. And here we are.
So what JC just did was run through the index charts of the strongest stocks in the market, right? These are your market leaders.
Yeah, but hold on. Would you argue that they? I mean, yes, they have been some of the strongest, but I would argue it's bigger than that. It's probably the most important, also, right? Not just the strongest, right?
Absolutely.
Like if they were weak, they would still be just as important.
These are critically important groups, but I don't even think that's why we picked them. I think we picked them because of their strength. They were the first ones to make those range breakouts above the prior cycle highs. Then we looked at them, we said, oh, damn, these are some very risk-on, very offensive groups of stocks.
Yeah.
Must be bullish. And since you made this list, I think it was about 4 months, maybe 5 months ago now.
I think it was January.
Almost every
or late December, early January.
Right. So it's going on 3 months.
Yeah.
These charts have been straight lines higher.
Yeah.
I mean, these groups have been so strong. They deserve a pullback. They deserve a digestion, some sort of consolidation, right? A little backing and filling, whatever. But even when you look at the monthly charts, JC, did you get that feel at all? Like, we've came a long way from those October lows. A lot of these groups.
Yeah. I mean, listen, you've already started to see rotation over the last 2 months into other areas, right? So this is more of like, you know, listen, the beauty of monthly candles is that we only get 12 data points a year, right? You know, so like, you know, gives us the opportunity to take a step back, take a deep breath, get a Cali style cheesesteak, right? Get a cocktail, really sit down and, you know, reassess the situation, get back to the longer term trends so that anything more tactical, anything more short term still falls within the context of these longer term trends. Like Apple has been a fantastic short for us, right? But technology is making a new all-time high still, right? So these are two different things. Lululemon has been maybe the best trade, long or short, that we put on all year. And that's in the consumer discretionary space. Also, you know, acting strong. Small cap consumer discretionary acting very well also. So the point is that even within a longer term structural bull market, which obviously we've been in for almost 2 years, right? We're coming on 2 years now.
Yep.
There are opportunities, long and short, delta neutral opportunities. We put on a delta neutral position in biotech last week, for example. But these monthly candles really remind us that, hey, still a bull market.
They bring you back.
Brings you home. For you yoga people,
yeah.
You know, when you're doing yoga and then you start thinking about like all the things you need to do. I got to pick up my daughter. I got to order, you know, new aluminum foil. I got, you know, all these random things you got to do and you're thinking about it. And then when you find yourself doing that while you're doing yoga, you get back to your breathing, start thinking about your breathing, right? And it helps you kind of come back home. These monthly charts are like that, right? It helps you breathe. Right?
This
like
is
that, Strazza?
I like Zen JC.
Zen JC, speaking of California, I started doing yoga when I moved out to Cali because I figured this was in 2015. I figured I'm going to live in California. I'm going to do like California things. I'm going to do yoga, a little gardening.
And then you stopped doing yoga when you moved back from California.
No, actually, I was doing a ton of yoga. I stopped doing yoga when I started having kids. That's what happened. Probably when I need it the most.
Chris Hayes, take a day. Take a personal day. I get it. 2 charts. 2 charts for the road from me.
What do you got?
These ones stood out. We know about the Fab Five. They're so good. Where am I going to be deploying money for the rest of the year? I want these fresh breakouts. Energy, materials, commodity stocks. Keep talking about it. I'm excited for Ian to come on later. We're going to talk all about commodities.
Freshies.
This is a freshie,
It's
right?
a freshie. Yep.
And then flip it to energy.
Woo!
Big one. Big one.
Yeah. This is the biggest one.
Yeah, I think.
Like in terms of like upside potential, in terms of base. You want to talk about zooming out and recognizing primary trends. Like, hello.
Yeah.
This thing's still below the '08 highs, dude.
And you know what I like most about this? So you zoom out and you see this nowhere for 16, 17 years, whatever. Zoom in to the pandemic lows. This thing was an absolute ripper off the 2020 lows, right? So the primary trend, or at least the underlying trend coming into this multi-year.
Are you taking a victory lap? This is Strazza taking a victory lap. Shout out Strazza. I'm not. I'm really not. I think the uptrend coming into this little multi-year consolidation range is so important, right? There was so much momentum there in 2020, 2021, and then just straight sideways consolidating. I know, but remember, Strazza, but remember, like this was like the post crude oil trading below zero.
Yeah.
And then you have all these clowns, speaking of California, like investing in this ESG nonsense, remember? And we were like we were abusing, like everybody knows that it was all nonsense and people who were bad at math lighting their money on fire. We know that now. But just to be clear, in real time, I was abusing it too, but Strazza was really abusing it. Like, nailed it. Wall Street made a fortune off these idiots. It was great. Shout out to Strazza.
I wasn't taking a victory lap, but you're right, JC. We were all over it. And I think we're going to be all over this breakout too. Like, I think we're going to be talking so much about energy stocks in the back half of this year.
So not ESG. No. Let's throw 3 Mexicans on the board of directors and call it social progress.
But it's interesting there when you talk about the real dirty stuff. Coal really giving up its leadership position. Uranium really looking vulnerable, losing momentum, losing steam fast.
Remember how mad at me? How mad you got at me because I wanted to short uranium? Remember?
I'm still mad about that. But oil and gas now, it's rotation within the group, right? Within the energy complex. And frankly, people have been talking about these solar energy stocks again. Should we get long solar energy? Biden trade?
Well, Strazza, think about it like this. Like, these are the worst. I mean, maybe there's something worse, like pot or something. But these are, for all intents and purposes, they're in the category of the worst stocks.
Not these days. Hey, look out for pot stocks now.
Whatever. The point is, solar stocks have been some of the most disappointing for quite some time now. Really if we're going to get all this rotation, would it make sense for money to rotate back into solar? I hate to say it. I do. I kind of wish that solar just would go away, just like for fun, kind of looks pretty good, man.
A lot of them did, JC. A lot of these stocks have gone away. And I love to see that, right? Like a good weeding out of an industry group.
I see what you did there, weeding out.
You kind of want that with any sort of like structural bottom, right? You want some pain there. We see this over and over and over again.
Can you please throw up slide 2 there, Mr. Spencer Israel? Slide 2. How do you feel about this, Strazza?
Talk to me. Ooh. We've been here before. I think
is it that easy, Strazza? Is it that easy? Too easy?
The bigger point about this chart is that these stocks have a tremendous amount of upside potential, right? This is a high risk, high reward, high beta group. Like you're saying, JC, they're laggards. Laggards are starting to work. They're getting up off the floor. And this one, couldn't ask for a better level to define your risk for long-term setup.
What do you think, huh?
I don't, I would rather buy a completed base, but we've put trades on. You've put trades on like this. and they're continuing to work. Betting that things that are weak won't break down or complete significant tops or bearish patterns, right?
Yeah.
Thinking of Disney now, kudos to you guys.
Yeah, but this isn't that.
No, but buying support and
Yeah.
betting on things not breaking down has been good in this environment.
Yes. Yep.
This feels like you're getting a little cute. I don't know.
Oh, really? I
Does
thought
it?
you would like this one.
Yeah, I figured you don't you love buying pieces of shit?
No. Not this.
I thought you were into
No.
masochism.
No.
Shout out Enphase Energy. There's a top that looks to be failing there. That's
Maybe
in this space. And if you look at something like Solar Edge, I got to get this chart. It's really similar in Solar Edge, JC, but against the 2018 highs. Check out SCPG.
Yeah. Yep. Yeah, I think there's opportunity here. Why don't we run a scan? Because we know the popular ones, but these things have been destroyed. So if these things are gonna, if we're gonna get like a rejuvenation, right, rehabilitation of these solar stocks, I think there's gonna be some new names. It's not gonna be just the old timers.
I mean, no one's bringing new solar energy stocks to the market these days. Trust me.
I feel like we need to go down the cap scale and just look. Maybe there's nothing there. Fonz, you listening out there, buddy? Can we get go all the way down to 700 million?
It's 700 million.
Any country. They don't need to be in America. I don't really give a damn where they are. Hopefully they're in China. The worse, the better.
Oh, and you know what? I take that back. In the chat, they're talking about this NXT. That did just come public last year.
It's almost like I've been through a few cycles, and like I know that like in new cycles you get new names. It's almost like this happens all the time, Strazza.
There's some interesting stuff here just cycling through now.
Yeah. All right, Fonz, set it up. Why don't we sort by proximity to 52-week highs for this one? Let's do that.
Yeah, we got it.
All right, Spencer. All right, we got a few minutes before our guest comes on. Kenny Polcari in the house. Shout out, Kenny. Yeah. That's cool.
We have to be sure to ask before he leaves. We have to make sure to ask him what he's cooking. He's always got something good cooking. So we got to ask him. Also, I think he's not in America right now. I think he's in the Eastern Hemisphere. So we'll find out.
Dude, I'll share my Kenny Polcari story about how I first met him when he comes on. It's pretty funny. What do we need to know, Spencer? What happened over the weekend? Anything exciting?
Funnily enough, were we talking last week? I think it was last week about how it whether the masses were saying that it's still the Mag 7 or not. And I saw several things over the weekend that it's not just the Mag 7 anymore. Did you guys know that?
Oh my God. Wow.
Yeah. I saw several articles in several different news outlets about not being news outlets / financial publications, whatever, that it's not just the Mag 7. It's not just 7 stocks. Granted, that was the headline for like an end of quarter type of review. So it's pretty innocuous, but I just thought that was funny because we were talking about that last week.
Get ready for this, right?
Ready guys, pro tip. It never was.
Look, end of quarter, right? So, everyone kind of looks around, what's going on, what happened in the quarter, do a little review. And yeah, so that was the headline to what was an article about breadth.
So you get ready now for the opposite narrative.
That's right.
They were complaining that the market was thin, right? The S&P 500 was going up. People were making money at the index level for sure, but it was only 7 stocks. They're complaining about that. Now they're going to complain that the indexes are not going up and that those same 7 stocks are not working and that they're important and that that's bearish.
Well, the indexes are going up. Well, some of them.
Or that they're not going up as much because they don't have those magnificent 7 stocks dragging them higher. That will happen, I think, right? Like Apple can't do it all alone, but if the rest of these guys get stuck a little sideways, the indexes could be dead as breadth is expanding, more and more opportunities are popping up beneath the surface. That's probably the environment that we're more or less headed for as we talk about things like energy and materials, right? Immaterial sector weightings in these large cap indexes. Energy and materials breaking out of those charts that we just talked about, they're not going to help the S&P 500. So get ready for that. An environment where the narrative is negative because the indexes are not moving higher. but beneath the surface, things are getting better and better and better. Equal weight indexes are working, materials, energy, right?
Can you throw up slide 2, please? Because I think that this tells a really interesting story. I think you're really going to like this one, Mr. Strazza.
Yep. These ratios, though, like I've been waiting all my life. International versus US, equal versus cap weight, small versus large. I mean, come on.
What?
Is it
Come on,
finally
what?
time? From
Is
the
it finally
stop
time for
going
what?
down? All these ratios, like there have been logical levels, but it hasn't stopped them from falling yet.
What are you talking about? We're down to the 2000 lows. What do you mean?
Yeah, but we were talking about this in Q4 of last year. Oh, logical level and small versus large,
All right.
international versus US.
All right, we're at the high. They're at the highest levels all year, and it's bottoms are. It's a process.
Highest level all year. Look at this chart, and that's what you got. This is ugly. Highest level all year. I mean, it's barely moved higher at all.
Right? Fine. I'm saying it doesn't. I'm
Okay.
just saying it's a bottoming process. It comes back to exactly what you're saying: rotation into energy, rotation into materials. It's not just the Mag 7, but this is a process, dude.
What I'm trying to say is we've looked at these ratios a couple times and been like, this would make sense. But it hasn't been like, you see that little auto advance off of that support range in Q4, gave it right back. Same thing with small versus large. Same thing for international versus US last year. My point is there have been some really like strong fake out false starts off of these support zones. If we get some material rotation.
Hey, now, see what you did there?
Oh, material.
Hey,
that was good. Steve.
Blog post. Great title. And an actual reversal in the primary trend, which is still very much lower in this ratio and the others that I'm mentioning, then yeah, I think this will be a big theme. But this is faked investors out before, is all I'm saying.
It's what it does.
Yeah.
Yeah. It's really
I'm starting to feel the same about these as the growth versus value stuff.
No, this is a sector rotation story. It's all it is.
Isn't growth versus value sector rotation story too?
Yeah, to a certain extent. To a certain extent, maybe.
You would expect if you were to overlay value growth.
Yeah, value probably outperforms. Yeah, that's right.
You would expect them to be close.
Yeah, small caps probably outperforming too, right?
All right.
International outperforming US.
We got time for one more chart. I got one for you.
Oh yeah.
We got chart time. JC, did you peruse through your international chart book this weekend?
I looked at some. I haven't dug in. We got our conference call tonight, so that's on my agenda for that's going to be my lunchtime.
Okay. I want to know how much you like them when you take a little gander. Here is IFA SPY.
I mean, nothing's changed though. That's why I haven't been in such a rush. Like nothing's changed from last month and the month before, right?
They're looking better, if anything. You know,
right. But like nothing. I mean, nothing's changed. China's slightly improved. You know, right? Like there's like a little, you know, right? There's a couple of little things, but like there's no material change in my international workbook.
I guess on a monthly basis, if we were talking monthly time frame, was there a big development in international equities? It's Japan.
Why? Failing at the tops?
Yeah, back at that monster level.
Let them absorbing that overhead supply. People tell me that it doesn't exist. JC is from 1989. Are there any buyers left from that period? Well, apparently there are. Or I mean, any sell, right? You know.
How about this one? Which way is this going? Because same thing as equal weight versus cap weight, small versus large, all the stuff we're talking about. This is now ex-US stocks, ex-US developed markets versus the S&P 500.
Yeah, I mean, you know, again, it's going to get back to those cyclical names, industrials, continued underperformance from technology, like we keep seeing. Like that's what this would be. Like if this thing breaks out, it's because you're getting more rollover in tech, right?
Yeah. And I think you can go and pick and choose the strongest countries, right? Like this chart, there's a lot of Japan in here. This doesn't mean that we don't want to be buying Japan or that we didn't want to be buying Japan, right? Last year, Japan was a huge leader. So you can go and drill into the individual country components of a developed markets index like this and find stuff that is outperforming the S&P and looks great. Italy, Greece.
Dog with hat.
Dog with hat, right. But the index itself, still no good. Still no good. You still want to be in the S&P 500. You still want to be in the U.S., more broadly speaking, than one of these developed market ex-US indexes. So maybe that changes. I think it does. I don't think this cycle ends and we say, oh, wow, U.S. outperformed the whole time again. But we got to see it. We got to see it in the charts. There's very little evidence of a reversal still here. A little momentum divergence, support. We got to see line move higher.
I mean, listen, these things, one of the things that stood out over the weekend while we wait for Kenny to come on, one of the things that stood out this week, is he here? Is he here yet?
Momentarily.
Cool. You look at just all kinds of alternative assets really doing well. Bitcoin closing at an all-time high, gold, all-time highs, just continue to act well. And you go down the cap scale. I mean, just look at this. The Book of Meme is up 17% this morning, right? I mean, wow, what is that? Like, that's crazy. Cat in the Dog's World, MEW, exploded over the weekend. There was a block trade. Somebody put in like $35,000. It turned into like 40 million in like 5 days.
Wow.
Because all this is on the blockchain, so you can actually see it. Like, you could see the transaction taking place. You do the math. Like, Costco hot dog. That's another one. The Costco hot dog coin. I mean, these memes, and it's funny because then I'll be like, oh, like I'll joke on Twitter. I'll be like, oh, Boomer's head explodes. And then I'll get like the random angry boomer. And he's like, this is discrimination. This is racist, all this stuff. And I'm like, bro, you're the meme. Like, you are the meme. That's what's funny about this.
It's
like,
it's a meta joke that they're not in on. Yeah.
Right.
All right.
Like, it's not a hating on boomers.
Hold on.
The okay boomer is a meme. Like, try to keep up, boomer,
Well, I overheard on one of the major networks, help me with this. I think it's CNBC is running a meme stock special.
Stop it.
Yeah. So like we're there. We've been talking about this. And how good is it? We found the index. There's an index for it that they delist this thing.
They did.
The end of last year.
They delisted the meme ETF in December.
So we got the data. It was based on some index. I'll pull it up.
Because the index itself still exists, even though the ETF does not, right?
Right. So I can look at the chart of the index. The reversal is in. So that base was still sideways. We've seen this a million times. Delist it. Base breakout.
Ripper. Yep.
All right. We got Kenny Polcari. Can I bring him on?
Yeah. Should I be offended of the TradFi bro meme?
It's not about you.
It's never about you.
I'm not a TradFi bro?
It's not about you. You are, but you're not bad.
I'm not bad. All right.
Bring Kenny on.
I don't wear vests.
Yeah, you're not. Come on now.
I'm not a vest khaki.
Get your Vineyard Lines
Metro North khaki wearing gray vest.
Get your Brooks
logo
on and then talk to me.
All right.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Kenny Polcari, how are you, my man?
Wait, can you hear me now?
I hear you loud and clear.
All right, hold on, because you're on my phone. I'm going to turn my computer off because the computer's delayed. This is live.
Where the heck are you?
I'm in my office down in Florida.
Oh.
I just got back. I was away on the Forbes investment cruise for the last week and a half, from the 19th till last night. Speaking at that event that took place from Bali, Indonesia, all the way to Singapore. And then I got off and made my way home. Got home last night at 10 o'clock. But I am back in Florida, back in my office. It's beautiful here. It's nice to be home. But a lot happened last week when I was gone.
You're telling me, Kenny, you got a hell of a tan, buddy. You're looking good these days, man.
It was hot in Indonesia. You think it's hot in Florida? Oh my God, Singapore. I mean, it was humid. It's humid all year round in Singapore, like it is here in July and August in Florida. But the weather was beautiful, so I have nothing to complain about, and it was great. The event was great. The Forbes cruise was great. Singapore was great. I'd never been to that part of the world before, so it was all very interesting.
Strazza, when he was in Singapore, he was causing floods with all the sweating he was doing.
It's Kenny, I hear you. It's a struggle. It's a struggle.
Singapore, I gotta tell, I honestly, it was, and I don't really usually mind the heat, but it was a real struggle in Singapore. At this time of year to be out, the humidity was way up here. You walked outside, you were soaking wet. It was ridiculous.
You can't walk outside. You're literally drenched.
No, but they live there every day, so I guess like anything.
Oh no.
We lost Kenny.
But for me, it was hot, and we
back,
think that
back.
Florida's hot in the summertime, and it is. But I don't think it's anything like Singapore was.
All right, Kenny, I want to get
Wait,
into
you
the
there? I
markets.
lost you.
Are you
Hold
there?
on.
Kenny, we there? We got you.
Wait, Kenny's on a thing's on a brief delay, but we got him back. So let's just keep on going.
We're good.
Yeah, we're good.
I want to get
Wait,
into
you
the
there? I
markets.
lost you. Yeah,
Are you there?
yeah, I'm here. Can you hear me? Can you hear me?
This is really delayed, Spencer.
Yeah,
Here.
yeah. Go.
Let's
we'll-
try
we'll
something
get him
else.
back.
Here, I'm gonna try something. Hold on. Let's try something.
Add delay.
Yeah, I took him off. I'm gonna give the
Like he was still in
computers
Singapore.
and the internet give it time to catch up. I'm gonna bring him back on, and let's see if this works. Is that Kenny?
Yes.
Kenny.
Okay, see, it worked.
Yeah,
All right,
yeah.
quick Kenny Polcari story, and then we're gonna get into the market. So I was working in Midtown
You're
Manhattan
gone
for
again.
most of my career. We lost him.
No.
I don't hear you.
All right, get him off. Figure it out, and then we'll
No,
get him back.
no. Wait, I will not give up. I refuse to give up.
right,
I'll
I
be
got
right
you
back with
now.
Kenny. I'll be right back.
All
You guys keep talking.
So Singapore is the hottest place in the world. No one is disagreeing. Absolutely insane.
Is it the hottest place in the world?
Hottest place in the world. I'm not a scientist. I don't know this for a fact, but it's the hot. There's nowhere hotter.
This
It
coming from the guy who lives in Key West.
wouldn't be safe. We're water people here, though. We're surrounded by water, so we can cool off.
Oh, because Singapore's not.
Just there's a lot of concrete and pavement. I didn't see much water. Actually,
Okay.
there was. Yeah, there's a lot of water there. You're right. Anyway, I was there for 2.5
I
days.
know for a fact. Why do you think all these marine shippers are based out of Singapore, bro?
We weren't there to go to the beach. Fun fact, actually, kind of too soon, but yeah, that ship was from Singapore, wasn't it?
I know. Yeah, but Maersk owned it.
Yeah, they're a monster.
Yeah. Okay, so while we wait for Kenny to come back, what is up with the bond market? Still crashing, dude.
No, it's not.
The bond market is not crashing. It has not been going down for 4 years.
Ask Ian if it's crashing. Bond market volatility index is absolutely fine. So crashing is not the word. Is it trending lower? Slowly and steadily? Yeah. Crashing? Get out of here, crashing.
It's a
I need
dude,
momentum on my crashes.
it's the biggest bond market crash in my life.
It's not a crash, though. It's like a
No.
slow drip.
30-year bonds getting cut in half. No big deal.
I don't know if it's crashing. Crashing is there's a certain speed, right, or rate of change to a crash. It's not crashing.
Right. So the fact that we're seeing what we're seeing, and we're seeing no volatility yet, and this is an orderly sell-off in the bond market.
It's a historic bear market for bonds, for sure.
Fine.
All right. I think we have Kenny. We have Kenny take two. Are we ready for
Kenny,
this?
take two. Bring them on. Let's go.
I want to hear the story.
It just Kenny. You have to turn like 90 degrees to your right, I think, to face the camera because that's where the camera is. But
It's almost like he's never done TV, this guy.
hey, no, but the camera's off to the side though.
I'm not sure which camera this is because I'm looking straight directly at my
Kenny,
camera.
turn to the right.
You're on the right.
Yes.
There you go.
But
Yes.
I'm not. But my camera's over there. I'm looking at the wall right now.
Don't worry. You're all right. Don't worry.
Oh wait, you know why? Because wait. It's using the camera in my laptop and not the camera on my
That's okay.
on my computer. All right, so here now I'm looking at the camera.
All right. So I'm working in Midtown Manhattan like most of my career, right? I was one of these
Yeah.
Midtown uniform guys, minus the uniform. And so I start working down on Wall Street and I start going to that deli. What's that deli on Exchange there?
It's the one right on Exchange and Broad. It's Champs.
Champs Deli, right? So best breakfast
still
sandwiches.
exists.
Great. It's still there. So I
Yeah.
start working on Wall Street, and I knew my way kind of, but like I wasn't there much, especially not every morning. So I start going in there in the morning, get my coffee, and then this guy starts coming in, Kenny. Every time Kenny Polcari walks in, I didn't know Kenny at the time. He's getting like standing ovations, like he's like a celebrity at this deli. Like the ladies behind the counter were like, "Oh, Kenny! Oh, Papi Chulo!" I'm like, "Who's
Papi
this?"
Chulo.
See, I'm not making this. I'm like, "Who's this guy over here?" This guy with
I
his
spent
Papi Chulo.
40 years on Wall Street, so I would go in that deli multiple times a day.
Dude, this guy was a legend. I'm like, "This guy? Who is this guy?" So anyway, that's how I know Kenny originally.
I actually still go, but when I go to New York and I get down to the exchange, I go into the deli, and they still say Papi Chulo.
There you go, dude. They got this breakfast burrito called the Heart Stopper, where it's like bacon, egg, and cheese with tater tots and hot sauce. Dude, it's ridiculous, man. That'll kill you like in a second. All right, Kenny, let's get into the markets. We've been in a raging bull market for almost 2 years now. We're getting sector rotation, which you've seen a few cycles in your day. When sectors are rotating, that's very normal. Now you're seeing money flowing into materials, into energy stocks, into things that were not working before. The things that were working before are now underperforming. Things like technology, for example, right? Like that rotation is very healthy. So like I kind of just want to start there. What are we'll get into rates in a minute in the bond market, but in terms of stocks specifically, how are you seeing things out there? What do you think?
I actually agree with you 100%. I think the rotation is very, very healthy. And the fact that tech, those 7 names are not dragging us higher. In fact, tech was in 7th place. If you look at the 11 S&P sectors in the first quarter, energy was way out in the lead, up 12, almost 13%. Yeah. Tech was like 7%, was up in the 7th position. It was probably up, I think it's 6.5%. Let me see it right now. Tech was up it was up 8.2%, but that was in the 7th position. If you look at energy, and then industrial was up 10%. You saw healthcare up, you saw basic materials up, all performing better than tech, which actually is very encouraging as you start to see money. People are taking some profits out of tech, which I completely understand, but they're not taking that money and just putting it into cash or treasuries. They're actually putting it into some of these sectors that have been underperforming, which suggests to me that the investor, the retail investor, the trader types, the asset managers are still very confident in where we're going. Nobody is betting that the economy is going to roll off the edge, so they're going to take their money out of tech and put it in cash. Because if that's what they were doing, then that would be a different conversation. But it doesn't appear that that's what they're doing right now, which continues then to fuel this very positive sentiment in the market. I think where I'm a little bit cautious is that Jay Powell says one thing and the market is hearing something very different. Again, Jay Powell spoke on Friday after the PCE report, and he made it very clear that he's not in a rush, the economy's not going down the drain, that he can hold rates higher for longer, yet the market continues to say, oh no, multiple rate cuts coming in 2024. And it's confusing to me because I hear one thing.
Hold on. When you say the market is saying that rate cuts are coming, what do you mean by that exactly?
Well, what I'm saying is the narrative, right? So it's traders or it's algos just saying, rate cuts are coming. I don't see rate cuts at all. I actually think there are no rate cuts coming in 2024. And in fact, Roger Ferguson, who's the former vice chair of the Fed, was on CNBC this morning, and he floated that idea that the market and investors should be ready for actually no rate cuts. Even though he said the percentage, it may be a small percentage, but it's very much out there in the conversation. And that's why I think the market's just gotten a little bit ahead of itself, and specifically in those growth names, right? The tech names. And so I suspect if there's a pullback at all, say we start to get even more pushback on rates, and the June, now they have a 67% of a chance of a June rate cut, which 2 weeks ago they had pushed June out after the CPI PPI report, pushed until July. Now it's back into June again. I think that's very aggressive. I think it's very, very I think it's illogical to me, considering that the data is not suggesting that the economy is going down the drain and there's any need for the Fed to cut rates. Look, 5.25% rates are actually historically normal. You and I both know that. But there's a generation of people that came into this business in 2007, 2008, when the great financial crisis happened, and every central bank around the world forced rates to zero, someone even negative, and kept them there for 15 years. And so a lot of these people have 15 years experience of really zero rates or low rates. Now that rates are back to historic norms, there are some people out there screaming, oh my God, rates are so high. Dude, 5.25 is not high. And
First
yet,
of
look
all-
at this. The
first of
market
all-
is kissing all-time highs, even with rates at 5.25. Bond yields, the 10-year treasuries, 4.2%. Okay, but we saw what happened in October when the 10-year treasury kissed 5%. There was more pressure on the market because that becomes a more attractive place where we're going to get some more headwinds. Until we get there, I think the market's okay. But I don't think the market is screaming for at all rate cuts, although the algos and maybe some traders are screaming for it because they think they have to come down. But I'm in the camp that if they stay right here, it's actually okay.
I just want to point something out, first of all. I specifically said, let's talk about the stock market. We'll get into the bond market in a minute. But Kenny, like me, right, takes one to know one. Like me, I can't have a conversation about the stock market without talking about the bond market.
Because
right?
you can't. How can you? You can't. You have to kind of consider both. But if you want to talk just about the stock market,
No. I wanted to point out that you're like me, right? We're the same here. I do the same shit.
Right.
We're the same.
But just to the point, the fact that the rally is broadening out is a very positive thing in my mind, right? We saw a lot of the sectors that underperformed in 2023 are now starting to, step up to the plate. Industrials being, key. Up to the XLI is up 10.5% in the first quarter of this year. Remember, that was an underperformer last year. Even the Dow this year is kind of underperforming compared to the other. The Dow itself, but that's only Dow 30 stocks, right? That's up 5%. But the S&P is up 10% in the first quarter. The NASDAQ, right, is only up 9%. So the broader, that tells you, and the equal weight S&P, by the way, is up 7.5%. And people have to start looking at that because that gives people a sense of what's really happening if you equal weight it and you take out the impact that some of these growth names have on the S&P on the S&P, right? I think it's a better way to get a sense of where money is flowing to and where investors are seeing opportunity.
Hold on, let's stick with the rates theme right there quickly. U.S. 10-year yield continues to drive higher, up all year. Right, bonds have been falling for 4 years. Kenny, you got a couple of years on me, couple more gray hairs, couple more cycles. Is this the biggest bond market collapse we've ever seen, or what?
I'm on the 17th hole. You're probably on what, the 10th, the 11th, maybe?
No,
but
they kicked me out after my first tee shot.
Yeah, but look, the bond market, in my mind, is going to continue to come under pressure, and here's why. Because and I'm surprised that we were talking about it at the end of the year. Suddenly, we're not talking about it anymore. But Janet Yellen needs to bring even more supply to the market to pay the debt that we're racking up. When she starts to bring more supply to the market, it's a simple econ 101 conversation: supply and demand. There's going to be more supply of treasuries coming to the market, and so there's going to be plenty of buyers out there. I'm not worried that no one's going to buy it. The question is at what price they're going to buy it, right? They're going to bid lower, and when they bid lower to absorb this supply, prices will go down, but yields will go up. And I think that's what's making me a little bit cautious on the market at these levels. I'm not saying I'm out of the market. I'm in the market. I'm not out at all, but I'm not allocating new money to the stocks that I think are way stretched. And those would be a lot of tech names. I'm allocating new money to sectors that underperformed last year that I think there's an opportunity. And industrials, healthcare, basic materials, financials are places that I'm putting new money. And look, I'm having conversations with clients, and if they're nervous, and some of them are nervous, is they just want to put new money into government money markets, which are paying you 5.1%. And those are completely liquid because it's a money market fund. It's not a 2-year treasury or 10-year treasury that is going to tie you up. But if they can earn 5% or 5.1% in a government money market fund, and it calms them down just until we get through what they think might be, volatile time as we move into the June rate cut cycle, if it's coming, which I don't think it is. But I think when they find out it's not coming, that's when we'll see some more volatility in the market. Certainly ahead of then what's going to be the presidential election. And you and I both know, while it's not written in stone, the Fed, after May, we're in that 6-month window of the presidential election. The Fed should not move up or down in rates for fear of being seen as political one way or the other, and they're supposed to be non-political. So the underlying kind of feeling is that the Fed should hold steady. If they don't do anything by May, then they shouldn't do anything, unless, of course, something dictates it. So the economy is falling off the edge. Okay, then they might do something. or if inflation really starts to tick up, then they might do something. But if not, if none of that, if everything remains the same, the Fed should do nothing in that 6-month window. They can cut after the election in November if they want, and cut again in December, but they shouldn't be cutting between June and early November.
Kenny, I love what you just said. I love how you just broke down the action in the bond market, like JC is saying. This is an epic bond market collapse. And the simplicity of, hey guys, this is Econ 101. It's supply and demand. The whole really bear market for bonds has been characterized by just an onslaught of new supply. The treasury issuances, right? Can you talk a little bit more about that? Why don't we hear about this more?
Well, remember at the end of last year, right? I think it was the last couple of weeks of December, they were in fact talking about the supply that Janet Yellen's going to have to bring to the market in the first quarter and into the second quarter of 2024. And the markets got a little bit kind of antsy thinking about it, but then they kind of dismissed it as if it's not important, as if no one's paying any attention to it. Well, okay, let's see what happens when she brings the supply to the market and we see the 10-year start to tick back close to 5%, which is what we saw in October when it hit 5%. The NASDAQ sold off 12%. The S&P was down 9%. Some of these individual names were getting beaten up. Only because, not because the fundamental story changed, but because there was this headwinds with 5% rates, and there's a generation of people, and maybe it's my generation that's older, they don't have as much time, and so therefore they're a little bit nervous, and so they want to put money into longer term treasuries and lock in 5 or 5.25% rates, and they're okay with that, right? Look, if you're 30 years old, then this conversation doesn't really mean anything to you because you shouldn't be in bonds anyway. You should be out there on the risk scale. But you're talking to a 63-year-old. By the way, my birthday was Friday, so I turned
Happy
63.
birthday, Kenny.
But you have to understand, this conversation that we're going to have is going to depend on who you are in terms of the life cycle and where you stand on the risk scale. Now, I'm 63, but am I out of tech? Absolutely not. Do I think AI is going to be the story for the next decade and beyond? Absolutely. I tend to be a little bit overweight in tech and AI than maybe other people my age, but that's just because I feel comfortable with, how I'm managing my money and where I've been and where I'm going. But there are people that I talk to, clients that I talk to, that are a little bit nervous and they don't want so much exposure. They want some, but they don't want to be overexposed, and they shouldn't be, quite honestly, overexposed. I make my own personal decision. So if I'm overexposed, it's only me that I'm either hurting or helping, right? Depending on what the market does.
So correct me if I'm wrong. I'm hearing bullish long-term tech growth, AI, that whole theme.
Yeah.
Over the short term, more tactically, you're talking about value, cyclicals, you're throwing out materials, energy, financials, industrials.
That's right.
How do you position, right, when it's not aligned across time frames? If you like tech over a longer time frame and the value stuff over a shorter time frame, what do you do?
Right. So how do I do it? So new money that I'm adding, I'm not adding to tech. I'm not chasing tech up here, but I am adding it to, in fact, industrials, financials, healthcare, which was a real underperformer last year. It's up. I think healthcare is up 6.5% the first quarter. Let me look real quick.
So increasing your allocation to these other groups, but not necessarily taking profits or selling your tech stocks.
Yeah, in my personal portfolio, I'm not taking any profits. Like people say, well, Amazon's trading or Apple's trading up. Why don't you take profits? Or Nvidia's trading it. Why don't you take profits? Because I'm going to die with those names, right? I just am not going to sell them. There are people that will take money off the table. In fact, I'll use any weakness to add more to those names, but I'm not chasing them on up days, but I'm also not selling them, right? There are some names that I trim a little bit, names that I felt, weren't really performing the way I thought they were, but it's not any of the tech names. It's not Microsoft, IBM, Nvidia. Apple's even down 10% in the first quarter. Guess what? I think it's Apple. I'm buying more because I think it's ridiculous. Apple makes $120 million every 3 months. So for people to go, oh my God, Apple's down 10%, I got to sell my Apple. That's nuts to me. It's nuts to me. So I'm just going to continue to buy Apple. Now, depends, I guess, on where you own it, how long you've owned it, what you're trying to plan for is going to dictate whether you peel some off or you don't. I'm not peeling off is my point.
So this doesn't have to be rocket science. What I'm hearing is as the market broadens, market internals broaden, your portfolio or your book is broadening in terms of the group positions that you're in.
Correct. And I will say last year I was much more tech focused. I was underweight staples, financials, industrials. I'm now, like I said, the new money is going into those sectors that were underperforming, and it's bringing because the new money is going the other places, it's actually bringing the allocation. My tech allocation is now just mathematically, it's got to go down because I'm adding new money into the other spots. So I'm not taking money out of tech. I'm just adding new money to the other sectors, and that will bring my tech percentage exposure down as a percentage of my total portfolio.
Yep. How about Bitcoin? You getting involved?
I do have Bitcoin. I don't have a lot. My average price in Bitcoin is about 37 grand, right? So am I up? Yeah, I'm up. It's great. But I don't have a huge footprint in Bitcoin, partly because I want to have enough that I'm participating and I can feel it, but I'm not going all in, right? Like, again, part of that is reflective of my age, right? It can be very volatile. I'm not really sure where it's going. I want the exposure. And so I do it slow and methodically, right? And so right now, am I happy? Sure, I'm happy. But if it goes to zero, is it going to kill me? No. But I suspect if it starts to break down, I'll just blow out before it goes to zero anyway. But at the moment, yes, do I own it? I do own it. Do I own Ethereum? I don't. That's probably a mistake. I owned it 2 years ago. And then when Bitcoin and Ethereum kind of collapsed, I sold everything and I started all over again just last year, repositioning myself into Bitcoin. I probably made a mistake. I should have done the same with Ethereum, but I didn't. But down the chain there and other Bitcoin stocks and Bitcoins, other ones, all the doggy ones and this one and the piggy ones and the whatever. I don't own any of those. I just own Bitcoin.
You don't know. You're not in the Joe Biden.
No,
No?
I'm not.
You're not
None
in
of
the
it.
Pepe in the Pepe coin.
Doggy coin and Peppy coin, whatever they are. I'm on to none of it. Just Bitcoin.
5 billion market cap, Kenny.
I hear you. But see that again, it goes to where I am in my life cycle, right?
I'm busting chops. Listen, you keep talking about how old you are. First of all, you don't act old at all. You look great.
I look pretty good, right?
You look pretty good, dude. You look pretty good.
I got a nice tan.
Yeah.
I mean, I look good.
Listen, they don't just call anybody Papi Chulo, right? You got to earn that, right? So Kenny, you spent a long time on the floor. You've traded over many cycles. You got a lot of young people listening, that've been around less than a decade or something like that. You alluded to that earlier. Any words of wisdom? I like what you just said about restarting, kind of resetting, starting over. Love that. And any words of wisdom you'd like to share?
No, so I think to the younger set that's just getting in or just starting is that it's never, people go, oh my God, I can't get in here because the market's at its high. I got to wait for it to pull back. No, if you're a lot, are a lot of these people in the group, are they investors? Are they traders?
Both.
Okay, so let's speak from the investor perspective first before the trader perspective, right? You got to start somewhere. You got to put your money to work somewhere, but I wouldn't, you don't take the whole load and then spend it all in one day. You feather yourself in over time. You make sure you build a diversified plan, and then you just stick to it. The most important part is just sticking to it and not changing your mind just because the market pulls back 10%. Change your mind because the fundamentals of the names you own have changed. If the fundamental story has changed, then it causes you to do some homework and decide what to do. But if Apple's down 10%, has the fundamental story changed in Apple? In my view, it has not. People are worried about China. Oh my God, I think they put way too much emphasis on China in terms of what I don't invest in China. I think there are many other places to put your money, whether it's in US or Europe. I don't go into China directly. So my exposure to China is going to be through Apple or through NVIDIA. That'll be most of my exposure. But, they see Apple trade off 10%. Do I think the fundamental story change? I do not. So therefore, I'll use it as a reason to allocate more money. So if you're just starting, you're going to buy a little bit of Apple. If Apple trades down, take the same amount of money, put it to work. You're going to average it down. You're going to bring your cost down, and then you're going to focus on the long term. If you're a trader, you want more chaos. You want more headlines. You want stuff that's going to make stocks go up and up because you're in it for the very short term. You want to buy, you want to sell, you want to buy, you want to sell, which is great. But that's not what I do. First of all, because I could never do it. As a member of the New York Stock Exchange, I was prevented for compliance reasons from even having a trading account, right? It was too onerous. I'd have to go off the floor. I'd have to call somebody. I'd have to enter an order. Then I'd have to wait. It was way too onerous. So I never, for the 40 years that I was on the floor servicing institutional clients, the mutual funds, the hedge funds, the pension plans, the foundations, I was more focused on the institutional business than I was on trading. It's only since I've left the floor, which is now going on 6 years ago, that I'm much more active. But again, not so much as a trader, but as taking a much more focused role on my long-term investments.
How do you think about the combination, right? Because I do both, right? I've got long-term investments and longer-term portfolios, and then I got short-term trading where I'm playing with the doggy coins and whatnot, right?
And I listen, I think that's great, and that you can do that. That's just not my focus. Partly for me, it's not my focus. And I'm the chief market strategist now at a $2 billion wealth management firm in Florida. That's certainly not the focus. The demographics, our clients are anywhere from 40 to, the end of life. And so the focus has to be different. They're not trader types. So my focus every day is really helping these people understand the markets and build a long-term investment portfolio. But for you and for many people that are traders, it's great, right? As a trader, though, you certainly have to be on your toes. You got to understand the trends. You got to be ready to pull the trigger. And you can't be afraid to pull the trigger, by the way, as a trader. You just, if you think you're done, or you think that it's hit your price, whether it goes higher or not, you can't be a pig. Sell half the position if you think it's going higher still from there. But take some money off the table to score some points as a trader. As a long-term investor, though, unless something drastically changes, I'm really focused on the long term. But it's perfectly fine what you do, and it's great what you do, and a whole generation of people that are doing that. I think it's great that people are coming into the market, they're understanding, the role of the markets. But what I'm afraid of, or what I don't want to see happen, is that people really think of them it's just a casino. I don't think it's a casino. I think it's a real opportunity to create and generate long-term and generational wealth.
It can be a casino if you want it to be.
Yeah, look, it can be. You're absolutely right. But that's where it gets frustrating to me, because I view it as a vehicle for growth. I view it as a vehicle to generate long-term wealth,
but Kenny,
right? I mean,
you're literally extracting dollars from those who treat it like a casino. So I'm all for it, right? Knock yourselves out, guys.
And I hear you, which is why I don't have an issue with it, but it's not what I do, right? I'm not a day trader. I'm not in and out. There might be one or two names that, that I'll say, look, 2 weeks ago on the 14th of March, I put in my daily note, the symbol is HEAR right here. Right? It was trading at $13.50. There was a story out on it. They made an investment. It's going to be great, very accretive. I put that in my note and I said, look, from a trading perspective, and from I'll do more homework whether I think it's a long-term play, but from a trading perspective, I think it's a great trading play. Well, the stock is now trading at 17.5. Right. So when I said it on the 14th of March and I put it in my note. Now, I don't necessarily do that a lot because that's not my focus. But when I come across a name that I think, wow, this sounds really interesting, and maybe as a short-term trade, it's a good idea. Now, I didn't even take my own advice. I should have gone long it. I did not, but it is up 4 or 5 points from when I even said it. But I was going away for 2 weeks. I didn't know what was going to happen while I was away. I didn't have access to my computer. I go, you know what? I don't want to get involved. But I should have listened to myself and bought it and stayed on.
Yeah, but Kenny, you made a decision. You're going to be on the other side of the world. You're in Bali, getting a nice little tan. The last thing you want to be worried about is your $300 million nonsense.
Which is why I didn't do it, right? But I also didn't panic with the rest of my portfolio, because the rest of my stuff reflects who I am. They're the biggest names in the sectors I want to be in. So you name them, it's IBM, right? In the tech sector, it's IBM, it's Amazon, it's Apple, it's Microsoft, it's NVIDIA, right? In the healthcare industry, it's Johnson & Johnson, it's Pfizer, it's Merck, right? In the consumer staples, it's Procter & Gamble and Colgate, which are very boring names, I get it, but they are the biggest names in the sector, right? And so therefore, and they're good dividend payers. And again, I'm more focused this point in my life, not that I'm living on the dividends, but I'm more focused on, the biggest names in the sectors that are good dividend payers as well, because then I just keep reinvesting the dividends that come into the portfolio every quarter, and which helps to build my positions.
All right, last question. For those who don't know, Kenny Polcari, Wall Street legend, putting recipes at the end of his research notes, right? Even before I knew Kenny, I knew about this situation. Yeah. I thought it was great marketing, by the way. Well done.
It was a complete mistake. It was a complete mistake how that happened. But really? Now it was a complete mistake. I started writing this daily note in the middle of the crisis, right, in 2010. And it was cathartic for me to kind of write down my thoughts and what was happening and send my thoughts off to clients. And my clients at the time, because I was on the floor, they were all institutional clients, right? Like I said, mutual funds, hedge funds, that kind of thing. And I put my thoughts down about what I thought was happening in the markets and in Europe and middle of the crisis and the financial crisis and the banks and all that crap. And so one weekend in December of 2010, I'll never forget it. It was after a really difficult week in the markets, and European banks were getting crushed. And I went home that night, and my wife and I were empty nesters at the time. And I walked around the house, and I went down, and I pulled all the shades down around the first floor, and I took the phone off the hook. Because when you actually had a phone in the house that was connected to a wire, right? I took it off the hook. I said, I don't want to talk to anybody all weekend. I said, I'm just mentally exhausted. I want to. It was December. It was rainy and snowy. It was a cold weekend in New York. I wanted to go upstairs, take a shower, put my pajamas on, light a fire, and cuddle on the couch with my wife, right? And then cook. I cook. My wife is Puerto Rican. She's a great Latin cook. So we cook those stuff individually and cook everything else together. So that's exactly what we did the whole weekend. Monday morning, I go to work. I'm typing my note. I'm standing in my booth on the floor of the New York Stock Exchange, typing away at 6 o'clock in the morning, and the phone rings. And it was a client and a friend of mine from Dallas, Texas, who called up and said, what do you do? Just shooting the shit. So I told him what I did, told him that story. So he said to me, what do you cook? Now, he knows me, so he knows I like to cook. So wasn't a surprise. The same way you like to play golf or you like to play tennis, I like to cook. That's just the way it is, right? So I told him one of the things was arugula pesto. Arugula pesto is pesto made with arugula instead of basil. That's all it is. It's simple, right? It's garlic, it's pinoli nuts, it's the cheese, it's the oil, it's arugula. You boil up the pasta, you make some garlic bread, you put it all together, you have a glass of wine, bang, it's done in 10 minutes, right? So I told him that. So he says to me, can you send me the recipe? I go, yeah, sure. Now I'm talking to you or him. I said, yeah, I'm going to type it, put it in the bottom of the notes. I put that recipe in the bottom of the note and I hit the send button. Before I thought about it, the send button went out to everybody on the list, not just to him directly. Fuck. I said, now I'm going to get my balls broken all day long. People are going to send me what's with the recipe, which is exactly what happened. Which made me laugh because I said, wow, people actually read my note. They saw there was a recipe at the end. So I spent the whole day repeating that story. But the reaction I got wasn't, you're an idiot. Oh my God. The reaction was, I'm going to try this. I'm going to send it to my wife. I'm going to send it to my boyfriend. I'm going to send it to my girlfriend, whatever it was. So the next day when I come to work, I was laughing about the conversation I had the day before, about the food. It was about the food, not about the finance. I thought to myself, well, isn't that crazy? So I'm going to put another recipe in the note. So I started putting a recipe in the note every day. It could be steak, pork, chicken, pasta, could be salads in the summertime. It could be rice dishes, whatever it is. And so I put it in my notes. So now today I gave you an Easter Monday ham and cheese surprise. It's like a tart. But it's made with mashed potatoes, ham, mozzarella cheese. You bake it in the oven. It comes out. It's like you use the leftovers from Easter dinner because you got the mashed potatoes, you got the ham, you got the mutz, and you make it with puff pastry. It's in my note. I give you all the directions on how to do it. It's perfect. But yes, that's the genesis of why there's a recipe in my note every day.
Kenny, tell us a little bit more about Easter at your house. Are you making a frittata?
Well, I'm going to make that tonight. Now, listen, yesterday I was traveling back from Indonesia. So, in fact, we didn't have Easter in my house because I wasn't here. But one of my daughters who lives in New York is coming down on Wednesday. So we're actually going to do Easter this weekend because she'll be here. My other daughter will be here and we'll be here. So we're actually going to do it this weekend. But yeah, we'll do the usual, right? We'll do lamb, we'll do ham, we'll do all the vegetables. But you gotta have pasta to start. I don't know if I'm doing raviolis or lasagna, but it's an Italian household. I mean, come on,
What are you doing?
I gotta have lasagna.
Kenny, you gonna be in Miami next week or what?
Money show.
I am not gonna be in Miami next week. Are you gonna be there?
Bummer. Yeah, we'll be there. Strazza and me will be there.
Yeah. No,
come down,
I
have
won't
some
be in
dinner
Miami.
with us. Come on.
Listen, when's that start?
Wednesday and Thursday next week.
And we're
next week.
Yeah.
Next week. So that's like the 10th and the 11th.
Yep.
Yeah, no, I'm actually supposed to be in New York. I'm supposed to go up to the 10th, the night of the 10th, because I'm the auctioneer at Children's Charity on the night of the 11th in Manhattan, which is something I've done now for the last 10 years for this particular children's charity. It's a friend of mine who sits on the board, and so I go up there and end up.
I run into Kenny at the Fox Studios every now and then, right?
We should get together more often at the Fox Studios.
Kenny,
you're the man, Kenny. Let's let Kenny run.
But there's some real love for you in the chat. Make sure you check it out. I'm just loving it.
Thank you. I appreciate that.
A lot of love.
I'll be happy to do this any other time you want.
Thanks, Kenny.
You're the man, Kenny.
Awesome.
Go get him.
All right, see ya.
How fun is he?
Kenny Polcari, legend.
Apparently, he's also the most interesting man in the world.
Right. Great beard. right? Look, you see that, Spencer? Spencer's got a pretty good beard, but come on, man.
I never knew the story about the morning note and the recipes, and I talked to
I
Kenny.
didn't know it was by accident. I thought that was a marketing gimmick on his part.
It was great.
As soon as you start writing about food, you get a response from people. See how that works?
Whenever I hang out with Wall Street guys, nobody wants to talk about the market. They want to know about wine.
Food. Mostly food.
Yeah.
Also in the chat, somebody said you should come down to Key West and do the Ernest Hemingway contest, which I've been to a couple times over the years. It's a lot of fun.
That's pretty funny, actually.
He's got a great beard.
He's got a great beard. Great beard, Kenny.
You know, two good guys to be compared to. The most interesting man in the world, and Ernest Hemingway. Not bad.
Could be worse. Could be worse. Dude, these girls, I mean, by girls, these are like ladies, like, you know, at the deli. They love him, dude. I remember, like, who is this guy?
So funny.
That was like 15 years ago, dude. All right, what do we got? We got Ian. Let's talk energy. Let's talk rates. A lot going on. Bob's getting the crap kicked out of him this morning.
Collapsing. Absolutely crashing.
Well, it's just math.
They should have you on CNBC. Come on, scare some people.
They can't afford me. You want to hit that bumper,
okay.
Spencer?
What?
You want to hit that bumper?
Yeah, I do. Just some headlines. AT&T data breach over the weekend, or they revealed a data breach over the weekend. So,
ooh, AT&T?
Yeah, if you're one of the 73 million people that had their account information leaked to the dark web, tough. It happens. It happens. 3M did a spinoff today. The stock is not actually down. They were spinning off their healthcare unit. It's now trading under a separate ticker, SOLV. And that's Solventum. What else? UPS is replacing FedEx as the primary air cargo provider for the U.S. Postal Service. Thought that was interesting.
Spencer, throw out that ticker again for the 3M spinoff.
SOLV, Solventum.
Huh.
Yep. That's what I got. We got Ian Cullen here, so let's talk bonds and rates and yellow rocks and stuff. How's that sound?
Let's see how long it takes.
Yellow rocks for the win.
All right.
Ian Colley in the house with someone, man. Happy Easter.
Good morning. Good morning.
Speaking of Florida, Ian Colley, the trend for rates just does not seem like it's down.
No, the uptrend remains intact, and that's really what I've been focusing on. I'm trying to keep it really simple over the past, year or so. Just focusing on that underlying uptrend, and it's, there's no signs of rolling over.
No. The easier trade, in my opinion, or the less hard trade, if you will, has been energy, materials, kind of like that rotation versus a short bonds.
Yes, I think if we're just going out and we're taking a bearish bond thesis in the equity markets, I think it's a bit difficult. I think, again, the better play if we're just looking at equities is to stick with buying or leaning into those areas of the market that benefit from rising interest rates, specifically energy. Energy's really been the play for a couple of years now. End of Q2 last year, as we were heading into Q3, we were shifting our focus toward energy, right? And energy had a great Q3 last year. Q4, not so much. But beginning of this year, that strength, that outperformance, that relative strength from energy started to kick back in. And these oil refiners look great. It's just a matter of time before the oil services and the explorer producers, really start to catch up. I mean, they're already starting to catch up.
They got a long way to go. It's been
they have a long,
and that's it.
They do. They have a long way to go.
Throw up slide 2, Spencer, please, because this, I think, is really what's driving things. Correct me if I'm wrong. this to me is just like, just continues to stand out. And it's just, this is the bond crash that Strazza tells me isn't happening. Just because volatility is not elevated, and this is a orderly bond crash. An orderly bond crash is still a bond crash, is it not?
It is, but an orderly bond crash is okay for equities.
An orderly bond crash is okay for equities. That's a great
It's okay
point.
for equities. When bonds were getting crap kicked out of them in 2022, equities didn't like it. Stocks didn't like it. So
great point, Ian. Great point.
Yeah, so a nice steady slow decline. Hey, there's other ways again to position yourself or build a portfolio besides that old 60-40 strategy. We've been talking a lot about it internally.
What's the target for gold? And don't give me this 2,500 crap. Step up to the plate. What's the target?
Well, I think 2,500 is the next level to focus on.
Don't cop out. Where's it going? Don't cop out. Where are we going?
Over what time frame? I think bigger picture, we could easily see gold 5,000. I don't think that's obnoxious at all.
By next year.
By next year, like 3,300.
3,300 next year. That's
somewhere in that ballpark.
Yeah,
if not higher. Not
higher. Right. Yeah. I mean, this is a huge base, man.
It is. It's a big breakout. I mean, I know you've seen the last month's stick in gold. I mean, but it was impressive, wasn't it?
Yeah. Well, how come silver, the crazy little cousin, ain't breaking out yet?
You know what? It's definitely I don't know. I don't know why silver's not joining in yet. I like the action in the gold miners. I like seeing GDX back above 30. I like, more and more individual gold mining names are breaking out above our risk levels. I see that as risk-seeking behavior kind of picking up for the precious metal space. Eventually, silver will join.
If gold's at 5,000, where's silver?
Silver's above 50.
Is it at over 100?
I don't know if it's above 100, but silver's printing new all-time highs.
So if gold's doubling from here, silver's only going to double?
I don't think it's only going to double, but I think...
You don't think you get a 4-bagger on a double in gold? You don't get a 4-bagger in silver? Come on.
I don't know.
At least a 4-bagger in silver, you'd think, no?
Yeah. Well, like 100, 120 maybe.
That's what I'm thinking.
Yeah.
I mean, again, it doesn't actually matter where we think it goes. It's just a conversation. We're not going to put on a trade at silver and buy it and wait for it to get to 100. It's kind of just thinking like bigger picture. Realistically, gold is breaking out of a 13-year base or whatever.
Mm-hmm.
If gold doubles from here, which we think it can, silver's got to be 4 or 5-bagger. You would think.
I mean, silver above 50, it's breaking out of a 40-year base. It's pulling a cocoa.
The largest cup and handle of all time?
Of all time, yeah.
Pulling a cocoa. Ian, throw up my commodity index. I know that you have a better one that we created internally, but this is what gets talked about on the news and on the cover of the Wall Street Journal. So this is what people are seeing. It's about new 52-week highs.
Strazza reads the Wall Street Journal.
Yeah, I do. A lot of people still do. I think we got the new 52-week highs on Friday.
I read it when I get quoted in it.
I can never find the articles that I'm in. They probably don't publish them.
You're not in them, Strazza.
Yeah, Simon, my friend. Couple times been there.
Strazza gets quoted in the journal. No big deal. Shout out Strazza. Wall Street Journal quotes.
I went back and I looked through my email like last year. I had like 4 unanswered emails from like a Wall Street Journal reporter. They're going to like one of my junk folders by accident. I don't think they really reach out to me anymore. But anyway, 200% off of the pandemic lows. 2 years straight sideways, nothing. Looks awfully reversally to me. New lag? Is it just energy? Thoughts on this?
No, I don't think it's just energy. If we go back and we look at the charts over the past couple of years, while the CRB index has been carving out this potential reversal, you had OJ, cattle, live and feeder cattle, cocoa, sugar. I think, cotton and coffee are next. You had other areas of commodity space, other areas or pockets of strength that they continue to indicate that we're in a bull run for commodities.
These other groups were working before energy. Energy's just joining the party and now driving this index higher.
Yeah, and it's predominantly oil. Was it almost 40%? It's 30 something, 30 and change.
So talk to me about the equal weight index and how that's different and what looks better.
You know what? This actually looks better.
Does
the
it really?
Equal weight index. Yeah, the
Why do
equal
you
weight
think that
index is kind of just dribbling, not really doing too much.
So you got 33 different contracts in there equally weighted.
Yes.
What do you think's dragging on it?
Probably a lot of the base and industrial metals.
Still.
Iron ore, rebar.
Is it common for the equities to lead? Right? Because steel stocks going. We're talking about Southern Copper and Freeport on here. It seems like industrial metal stocks are starting to work. You tend to see them lead the futures themselves?
Not necessarily.
No.
Not necessarily. I think we're just in a bull market. And we're and it's not just a bull market for US stocks. It's a global bull market. And when you look overseas, you got a lot of industrials, right? You got a lot of material names.
That's
and
right.
No tech.
those stocks are going to be doing well, which they are.
No tech.
Are you as excited about these XLE and XLB breakouts as I am?
Yes, I am.
Pretty good.
Ian's like, this is my time, baby.
Fine.
In my glory.
I'm watching that XLE consolidate for a long time.
I got one more reversal that we got to talk about. Both of you guys need to see this. It's so important. Throw up the value line. David Lundgren. JC missed the interview. Unbelievable. One of our absolute favorite guests.
He's the man.
On the morning show. Was on last week. He brought this chart. JC agreed. It's a good representation of most stocks, what most stocks are doing. We can officially say that most stocks are now in a pretty fresh bull market, markup phase, new uptrend, whatever you want to say. We went from down on the left-hand side of the chart, bear market, sideways market, trendless, completing this rounding bottom reversal pattern. This is just a textbook bearish to bullish reversal. We talk about this pattern over and over and over again on the blog, everything we do. The reversal's in. This is a big one.
Underrated index, guys. If you're listening out there, we got made fun of. Like, this is like nerd alert. Like, you got to be a hardcore nerd to look at the value line index. That might be true. But let me tell you something. This thing goes back to the 1970s. There's about 1,600, 1,700 names in this index. It's a great index. Essentially, it's listed here as most stocks, which I agree with, but it's essentially the median stock, what the median stock in the market is doing. Great representation of that. It's not everything, because let's remember, we do live in a market cap weighted world. Whether you like it or not, we do, right? It's a cap weighted world, as it should be, by the way, right? So let's just keep that in mind. Great, absolute great chart. I did want to bring it back to commodities quickly. Sorry, Strazza, to steal the thunder, but we do have Ian Culley in the house.
Ian likes stocks too. Ian likes stocks. Tell him you like stocks.
Nobody said he didn't. And by the way,
Ian's
the reason this is breaking out is because a lot of the Ian stocks, correct me if I'm wrong.
Yeah.
Right. So this is right in Ian's wheelhouse, right? Inflation protected treasuries, the tips today, hitting the highest levels relative to nominal yielding treasuries since Halloween.
Yeah. How's that for inflation?
What's that mean?
For the home gamers keeping score at home, that is what the bond market thinks about inflation. So I know that the pretty lady on the TV says that the inflation is not a problem, and then you got the Powell and the Yellen and the Bernanke and the whole thing. But I'm interested in what the bond market thinks, right? I don't trust humans. I trust dogs, and I trust the bond market. And the bond market continues to suggest that the inflation of choice is the inflation. And you got the materials, you got the energy, you got the commodities, you got bonds collapsing every day. And what Strazza says is not a crash. Looks like a crash to me.
Ian called it a steady and orderly uptrend. I really like that more.
Steady and orderly uptrend in rates.
Rates.
Yeah.
Yeah, downtrending bonds.
30
Yeah,
years getting the crap kicked out of them, dude.
High yield bonds getting smacked
So-
pretty good today.
Yeah, but relative to
good.
treasuries, I mean, they still look good.
They do.
You know, and I think that's kind of that's the message we're getting from the bond market right now.
They never broke out. How did they not break out, dude?
Yeah, right.
Right?
But so inflation is sticky. Inflation's here. It's not going anywhere. At least not anytime soon.
Oh yeah, $250 oil. Let's go, baby. That's
Let's-
the pain. You know how much pain people are gonna see if you're at $200 oil? People's heads are gonna be exploding. Those are our profits.
Yeah, exactly.
Am I
Exactly. So there's no reason to get worked up or over inflation, or the fact that commodities are starting to rip. There's ways to play it.
Yeah.
There's ways to play it, and there's a way to profit from this environment. And I think that's the important takeaway.
I got an energy recess. You want to hit the bumper quick? I got an energy recess. You guys will appreciate it. So the other day, remember you guys were breaking my balls because I didn't know how much money I spend at the filling up my gas tank, right? And I had no idea because I don't look. And then you guys were like, "How do you not look?" So the other day I was filling up my gas tank with my wife, and I'm taking pictures of the screen, and she's like, "What are you doing?" I was like, "Oh, I told her the story of how you guys were messing with me." So let's see. Here it is. So I didn't have a full empty tank. I don't know if you guys can see that. It wasn't a full
77?
empty tank. $77.46 for almost 20 gallons.
Yeah.
That's
You had
how
a
much
big
I
tank.
spent.
Yeah.
Well, it was for the Denali, so it's like a big SUV. So
Yeah.
I don't know how many gallons I have. I don't know anything about cars, but it's $77. That doesn't sound like a lot.
I
A lot.
mean,
It's about $100 to fill up our Suburban. So
So
I bet
let's say I had
probably
maybe about a
comparable.
quarter tank, a little bit less than a quarter tank,
Yeah.
probably $100 for me.
Yeah.
And I have a Denali, same as a Suburban, same thing.
Yeah.
Yeah.
Yeah,
All right.
you guys
So
got a
100
big
bucks, is that
tank.
a lot? Is that a lot though? $100? That doesn't sound.
Yeah. I mean, I think it's pretty standard.
I thought that I was spending like 175, 200 to be honest.
No.
I don't look. I never looked until you guys were like messing with me. So I looked, I took a picture. So we got the answer.
You guys know
$100
what?
to fill the tank for a Denali? That doesn't seem that bad.
Did you do a little boots on the ground, figure out what a gallon of milk costs too?
Ooh, haven't gotten there yet. Haven't gotten
next
there
week.
yet.
Next week.
Next week.
Next
That's
week.
right.
Next week.
All right. Let's give Strazza his due. Steve, man, I don't know if anyone out there can beat UConn right now, but
Boys
what is UConn? Is UConn the Bitcoin of college basketball, or is it the AI of college? I don't know. Can anyone beat it?
We got 2 games to go. But the boys are really good this year. They're crazy good, and you're gonna start to hear this college basketball team everything. Yeah, if they go win it all, the numbers support it. You're gonna hear greatest team of all time kind of stuff. I think I've never seen a UConn team this good. I've never seen a college basketball team this good, so it's exciting.
Yeah,
And
they're
the girls.
really good.
Shout out Lady Huskies. I know
Here
JC.
we go. We can't have one conversation while talking about women's basketball. Dude, nobody gives a shit about women's basketball, man.
We're going for a double.
They do in Connecticut.
Caitlin Clark,
Nobody
look out.
cares. Nobody
Huskies
cares.
Commerce.
Big game tonight on that front, on the women's basketball front. I will be watching. Maybe.
I definitely will not. You'll be the only one watching, I think. Nobody
Spencer.
watches.
How much fun are these guys having over at NC State? I mean,
Oh my
this team is
God.
so fun
What?
to watch.
Everybody hates Duke. I don't really hate Duke, but a lot of people do hate Duke. And like this, the big fella just abusing Duke.
DJ Burns Jr. They whooped him twice in like 2.5 weeks now, right? Because they beat him in the
Yeah.
ACC tournament championship, which go NC State. They had to win 5 games in 5 days just to get into the tournament. And now they're running the table in the Final Four. Really cool.
My favorite part of March Madness is that you can get these random guys they're not going to play pro basketball and become folk heroes. And it usually happens in the earlier rounds with the small schools, but DJ Burns, man, this 280, 90-pound dude at NC State, I hope he gets all the endorsements, man. Make all the money. You deserve it.
He's fun to watch.
Crushing it.
He does.
Totally.
Yep. Good for
Love
him.
it.
America's team. NC State. Who knew NC State would be America's team?
America's team.
All right.
Ian, you got anything?
Oh, I'm still hungover from the Easter holiday.
Yeah, what were you drinking? Who gets drunk on Easter? You got really
No, I mean like from just the food and like
food coma.
I wasn't drinking. No, I just chowing down on lamb and ham and cheese.
Wow.
Lots of cheese. I didn't realize there was so much cheese at Easter. But
I was drinking wine from Georgia. It was lovely. Did you know that they? Yeah, do you know
Country, not the state.
Yeah, the country, bro. Definitely not the state. They've been drinking wine in Georgia since 6000 BC. 6000 BC, these guys been boozing before the Romans, thousands of years before the Romans. Did you know the Sicilians were making wine? I think going back to like 4000 BC. The Sicilians. So shout out, Sicily.
Did not know this.
What were the varietals?
What were they? Who?
What were the grapes? What were the varietals?
Oh man, they got all kinds of stuff. I mean, there's been a lot of like, is it like mutation of these, over the years because they get together. The famous one in Georgia, I don't know how to pronounce it, is starts with an S. It's called. I'm gonna butcher the hell out of it. Starts with an S. Saparavi, like that.
I don't know.
All those Greek varietals that are hard to pronounce.
Yeah, the Greek ones are really tough. Acetico and
yeah, it's
yeah.
All right.
They're tough.
Shout out Wavy in the chat. Nobody talks commodities better than you guys. I'll give you guys that. Ian, kudos to you. JC was giving me props before for being all over oil and gas and bearish ESG. Ian has guided us through and navigated this commodity super cycle so beautifully up until now.
So this is the beginning of the wave 3 of the commodity super cycle. Can we say that?
I think it's wave 2.
Yeah.
You don't think that we just finished a corrective wave 2?
Oh, okay, yeah, corrective wave 2. Yes. Okay, yes. Okay, yeah. We're talking Elliott.
Yeah,
talking Elliott.
yeah. Sorry. Yeah,
I'm thinking in terms of like 3 waves of inflation.
Get out of here with 3 waves.
Inflation. What no more waves?
So far, you got the initial thrust.
Yeah.
The impulse wave, if you will, for you Elliott wavers out there. Then you get your corrective wave 2, perhaps a zigzag of sorts. And then you get that wave 3, which historically is the biggest and the longest most often. So whether you like Elliott wave or not, or whether you count waves or not, I don't. It's more of like understanding the structure of the markets. That correction, we call it a wave 2. Wave 3, stepping in. Let's go.
And there's a theme here, right? You're talking about like the best leg for commodities just coming underway now. We were talking earlier about structural breakouts in large cap energy and a multi-year breakout in materials. That supports this theme that you're talking about.
Yeah. Bonds, 30-year bonds down 1.5% today. Big deal. Yeah. By the way, do you notice how Kenny Polcari cannot have a conversation about the stock market without talking about the bond market? I respect
we gotta have Kenny back. Hey, you heard it here. You heard it here. Kenny Polcari. No rate cuts. 2024. I like it.
Yes. I missed that.
I like it.
It's good to hear.
Yeah.
Take us that, Spencer.
I like it.
All right.
Yeah, Kenny not getting
it's
political
Monday.
at all.
It's Monday, which means we got the Flow Show with Strazza and Sean coming up at 11:30 a.m. Eastern Time. Stay tuned for that. Thanks to Kenny Polcari. Thanks to Ian Colley. Thanks to all you in the chat. See you guys later.
Look at Sean.
Go make some money.
Look at Sean Tesla flexing in the chat.
Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off.